Café with Cavanha and Ecoa Rio bring the topic scenarios for oil prices with Regina Méar, Global Sector Head of Energy and Natural Resource at KPMG, Manuel Fernandes, KPMG Rio de Janeiro Office Managing Partner. Thank you both for accepting this café. Good morning.
Good morning.
Good morning for you. For us, good afternoon. No, Manuel, we are in Rio.
Yeah. Good morning, Cavanha. Thank you for the invitation to be on this café with you and Regina.
It's a pleasure for me. Thank you. We have a complicated world at this time, aggressive virus, excess of oil production, confused leaderships. What are the 2, 3, or 4 main factors for these low prices of oil?
Well, obviously, the biggest factor is the destruction of demand. You know, we've all stopped driving, we've stopped flying incredibly abruptly, and that's taken 35 million barrels per day of demand out of the market. OPEC Plus didn't respond quickly enough. And even then, with their 10 million barrel per day commitments, it's not going to be enough. And so it depends on how long we are living in this oil supply glut. I think that it's going to take quite a while for the oversupply to work its way through. So if you just look at the delta, if it's 30 million barrels per day of demand destruction, 10 million barrels per day of supply restriction, that's still 20 million barrels per day of excess capacity. So that'll build up until storage can't take any more. And then we have to wait for demand to come back and for supply to be turned off to get things back in balance. I think it takes over a year, maybe longer, for that supply glut to wind its way out of the system.
Yeah, I could probably add on the Regina's comments that the level of inventories for the region, the Latam region, for Brazil is getting higher as well. So we already seeing Petrobras utilizing pipes, utilizing FPSOs to storage crude and gasoline and other lubricants. It's a fact that everything will depend on demand coming back. In Brazil, we have around 25 days storage capacity. So we export 1 million barrels a day from Brazil. So the region depends a lot on the oil. If we take the main important countries, we see Mexico. Total sales of oil from Mexico is around 17-18%. Ecuador 12%. Colombia 9%. Brazil is around 8%. And Mexico, Ecuador, and we'll probably add Venezuela as well. They are pretty much tied to the WTI. So we saw last week trading at $1 per barrel, even negative numbers in Mexico. So yeah, let's see what happens. But low prices are a result of all of these geopolitics, but also, of course, the COVID plays a very important role.
Mm-hmm.
Regina, you mentioned maybe take more than 1 year to recover a normal, a regular market, let's see. And I know that's a challenge to talk about scenarios and timelines is a very tricky way, but can we imagine timelines and hypotheses, I mean, 1 year, 2 years? What's the rationale in this vision to recover the market?
So let's look at the data that's coming out of China, because they are ahead of the curve relative to the virus. And as of mid-April, their passenger transportation numbers were still down 60% compared to last year. So that's just people moving via car, via railroad, airlines, etc. It was at its peak, the lowest, it was down 80%, some cases 90% year over year, and that was in late January. So in 2 months, we've only recovered, a small fraction of getting back to normal demand. If that vector is the case for the US and Europe, that's a very that's a very negative scenario, right? So that means it takes a lot longer there is a scenario that says the U.S. in particular moves around quicker than China. So you're probably hearing stories in Brazil locally about different states across the U.S. country opening up. So if people start to get more confident and they move more quickly, then you won't see the demand destruction that we've seen from China. But if I had to handicap it, I think it's more likely that it's the more negative scenario, because even when things open, there's a fear factor. People don't want to expose themselves. So I think it's just going to take time for that behavior to change and for people to get confident that it's safe to move around.
Mm-hmm.
Yeah, and what we've seen so far in Brazil, as a result of this decrease in demand, we saw that the majors reducing their investment plans for 25, 30%. That's about $33 billion reduction. It's a big number for us. And all the majors doing the same thing. So this will affect the whole supply chain, the service providers, product providers. These are long-term contracts, medium long-term contracts. So to see this recovery will take a while. Brazilian government just canceled the 2020 bid actions for this year, and the Cavanha knows very well what that means. We have like 10 years probably. We are delayed 10 years probably production because of this bid not being there in the past. So this could be an issue to recover. Because as I said, they are long-term contracts. Petrobras has decided to reduce production to 200,000 barrels in April. This will also, they said, they will limit their production around 2 million barrels a day. So it's another thing that will affect the whole thing, because Petrobras now is around 85% production in Brazil. They had a divestment plan that was going very well. We saw a lot of investors interested in buying refineries and buying pipelines, gas pipelines. So these are on hold. Prices are very good because the US dollars per reais are very high. But on the other hand, what's going to happen with demand? So these projects are on hold. Let's see when they come back. Of course, they are renegotiating all the contracts with the supply chain as well. So for a country that depends a lot on this, it will take a while. I think new projects will be postponed, and I think at least we are benefiting a little bit because we import a lot of lubricants and other products, especially from the US, where the WTI is really low. So Brazil could benefit on it, which is really good for us. We have a very strong internal market as well. So even if we have problems to export the 1 million barrels, we still have a local consumer market very powerful. They helped us in the past, and I'm sure it will help us going forward.
Probably the U.S. is suffering a lot with small companies in the shale gas opportunities. So the big companies can stay, let's say, healthy for a while, but not for long term. And what are the consequences in terms of providers and small companies, both in the U.S. and Brazil? Are we seeing some of these cases? Several cases, or not yet?
We expect that we will see bankruptcies. There's only been 2 high-profile ones so far in the U.S., and one, importantly, is not even a shale player. So it's a deep water services provider. So we do expect that we will see more. The U.S. government is trying to make liquidity available to some of those smaller shale players. So they're considering raising the threshold about how big you have to be to get the small business loans. And I think that's an important backstop that will help some players survive. But no doubt, it's an incredibly difficult environment. As Manuel pointed out, you saw WTI go negative last week. Not just negative, but a lot negative. At one point, it was $40 negative. It settled at negative $37. So, because that WTI has transport constraints and is landlocked and has less delivery capabilities, there's a choke point in Oklahoma that is causing extreme difficulty in that price range. So that's going to put a lot of pressure on Texas and Oklahoma and other U.S. shale producers.
And for sure, Manuel, in terms of a north part of the country that we have onshore operations, small companies who are trying to work with this price of oil, they practically will stop operations, no?
You know, as Sheila is saying, the WTI market was really down, but the Brent was a little bit, not that bad.
Mm-hmm.
And Brazil oil is more Brent indexed than WTI. So we saw probably selling at $10, $15 per barrel in the last week. But the CEO of Petrobras announced last week that they are ready to work at a $25 per barrel price, which is good. I think the pre-salt cost, the lifting cost is pretty much just around $7, $8. So they will probably survive on a 25 price market for a while. It doesn't mean the all majors have the same structure, but at least in Brazil for the pre-salt, we've seen that. Of course, the onshore and the shallow waters, Petrobras has already stopped their production because the cost is much higher. So we will see a balance between those. They will not stop, and I think there's a big difference. In Brazil, the oil is property of the government, and the government, gives concession. So the companies can go back and say, hey, we need to go to reduce, or you need to stop for a while. I think in the US it's a little bit different because they have the land is for of the landlord owners, and they have to keep paying leases and everything. So
Right.
it's a little bit complicated.
And in terms of energy transition, I mean, we have a postponement for 1 year, 2 years, 5 years, and with the low price of oil, may be very strongly affected the transition, no?
Well, there are two schools of thought. One is that it does delay the energy transition significantly, but I'm not seeing that. I think a lot of our larger big energy companies are seeing this as a wake-up call. It's like, wait a second, if I'm only going to get less than $10 per barrel for this resource, maybe I need to pivot to cleaner energy alternatives more quickly. And I also believe that the shareholders, the investors, the employees, the customers are not going to take the foot off the gas. So it's definitely taking a back seat during the health crisis that we're facing with a global viral pandemic. But I don't see it going away once things start to get back to some level of whatever our new normal is. I believe the energy transition stays at the forefront and continues to be a priority, not just for our energy clients, but for our other large clients that are concerned about climate and the carbon emissions and their operating footprint.
I agree with that. I think renewables will be on top of the agenda. We see a lot of banks that will not finance anybody if they don't have clear ESG targets and the UN development plans target. Investors will not invest in companies that are not doing this. So I think it probably take a little bit of time, more time than we would expect. But it's still a strong. Decarbonization is still on the top of the agenda. I don't see that changing shortly.
Let's be optimistic, but it's complicated this time, no?
Very, very complicated. It's a tough environment.
Yeah, that's right.
I mean,
it's as I say, it's a challenging time, and I'm sure you will have better days ahead.
That's for sure.
For
and
sure.
we have to count the blessings that we do have, right? I mean, we can still see each other. It's brought families closer together. My kids, even my adult kids, are home, and we're having quality time. I'm blessed to be able to work from home. I'm blessed to be a part of an organization that's very committed to its people and its clients. And this will pass. We'll be stronger as a result. And I think there will be lots of lessons learned that we can all take away.
Yeah, that's right. Thank you so much for this conversation. It was nice for me. Thank you. Thank you very much.
Thank you, Armando. It's good to see you both. Thank you.
Thank you.
Have a good
Bye.
day. Oh, thank you.